Good afternoon. Welcome to Officer 24/7. My name is Niharika Valia Bhatnagar and I am with you with the area of accounting and financial management for bankers. Everyone, I hope you're already done with the module A with me. I completed it in just the last attempt. That was in the last week. We had one short marathon of module A. Today I'm here with you for the module C. Acha, along with this, one more request. Our test is going on. That means at this point of time, our test is going on regarding the examination, that is JIIB Readiness Test. It's a mock test that we are conducting for all the JIIB aspirants. For that, what you need to do is you need to attempt and submit it before 12 a.m. today. That means the last date is 31st of March. It started from 29th of March. If you are already done with, then please be with us tomorrow for the analysis. And if you're looking forward towards the area, tomorrow I'll be conducting the readiness and test analysis as well, in which I'll be talking about the entire examination and also from the point of view of this part, right? Acha, this is one part, everyone. One part is, if you haven't gone for the test yet, let me just show you where to go in order to go for the test. Okay, just a moment. This is the test, everyone. Just go on to the area of our website, that is www.adda247.com. Go on to the specific area of this. As soon as you go on to the front page only, look at this, view all tests. First of all, you have to log in, right? Once you log in, then things would be different. Just a moment. I'll do the sign in detail later, but I think I can open it up for you. Chale, I think I can. I have already logged in, so I'll just show you the login area. This is where I've already logged in. What you need to do is go on to the area of our website www.adda247.com. Go on to the area of view all tests. You can see there are multiple tests that are going on right now. Our test is JAIIB AFM Readiness Test that started on 29th of March. What you need to do is click on this area, click on the area of attempt now. This is where you can see this is a 2-hour test, everyone. You can attempt till 12 a.m. today. That means you will have to start by maximum 10. Only then you will be able to submit by 12. After 12, any kind of submissions will not be taken, and it has to be submitted before 12. That means not starting, but end of your test should be by 12 a.m. today. Okay, that is, if you're planning for it, it's a 2-hour test. Dedicate your time properly, and I would suggest all of you, the bankers who are there in the paid classes with me, or the bankers who are in the other classes, everybody please go ahead and go for this particular test. It is super important that we keep on learning and we keep on growing, everyone. So please go ahead and attempt the test, and tomorrow I'll be discussing the examination, whatever we are conducting, those 100 questions. I'll be discussing it with you on our YouTube channel only. So stay tuned, be with me. Tomorrow I'll be doing that, and I'll be updating about it to you as well. So stay tuned in terms of Telegram channel so that you can understand what we are dealing with right now. Okay, everyone, let's begin with the session. We're talking about just a moment. So let's begin with the session, everyone. First of all, please share the session, like the session, and don't forget to subscribe our channel if you haven't done it yet. So those 3 important things. But first of all, click the thumbs up button, and then let's proceed further. Okay, everyone, what are we dealing with? As I already told you, we are talking about module C in this particular class. So let's go ahead and talk about module C. First question: which principle of finance emphasizes on the importance of considering the timing of cash flows, time value of money, opportunity cost of money, risk and return, or diversification? When we talk about the principle of finance emphasizes, Principle of finance is covered in the specific area of our this is a part of module C, capital investment area, and this is also there in the fundamental area of financial management basic chapter. Okay, so which particular area? Timing of the cash flow. See, if I'm going to receive money tomorrow, day after tomorrow, it's fine. But if I'm getting the money after 3 years, after 4 years, is it really justified that I get the money on this basis? I don't think so. Then I will have to adjust my amounts accordingly so that I can proceed further in a proper manner, right? So in this case, the next point that would be important would be the time value of money. Done, everyone? Now let's move on to the next question. Which principle of finance suggests that there is a relationship between the level of risk associated with the investment and the potential return it can generate? Time value of money, opportunity cost of money, risk and return, or the liquidity. But when we are trying to work in a business, sometimes we have a certainty, sometimes we might face uncertainty, right? You cannot always say there is a certainty I'll receive money in the future. No, there can be points where we can receive and there can be a situation where we won't receive the money at all. So technically, in this case, what's going to be the answer? The answer to this question would be exactly what? Risk and return. The point is there only. Level of risk is basically related to how much risk are we taking and how much returns are we making. This is based upon the area of no pain, no gain, or the best one would be higher the risk, higher the return. Obviously, this is the same thing that happens in terms of equity as well, everyone, isn't it? Okay, anyhow, next question. Which principle of finance highlights the trade-off between the return generated by the investment and its liquidity? If you will go through the particular questions now, I have actually covered in this area as a blend. I have covered it chapter wise, so you can actually review which particular chapter is covered and followed by the next chapter. So that's one of the best areas I think you can look forward to, because ultimately I'm covering each and every chapter in this particular format. Time value of money, opportunity cost of money, risk and return, or liquidity and return. What's going to be the answer? Go ahead and try it. Acha, if you haven't liked the session, everyone, go ahead and please like the session as well. And one more very important thing, everyone. Do you know our JIB courses are available at the lowest price right now? Literally the lowest price that I've seen now. It would be the Mahapacks are available at a very reasonable price, and at the same time the courses are also there. 81% discount is going on and few hours are left, everyone. So please make sure that you are utilizing this particular financial year to the fullest and getting yourself into the gear. Right? Chaliye. Time value of money, opportunity. We're talking about liquidity. Liquidity means randomly if you come and ask me that Niharika ma'am, I need rupees 1 lakh. Can I spare 1 lakh to you right away? If I can spare 1 lakh, that means I'm going in a good way. I am earning enough where I can take your help, or I can in the future, if I expect something from you, at least you will be able to give me things on credit, because I am able to give you the money back. So in this case, the answer would be liquidity and return. Done, everyone? Chaliye. Let's go ahead and talk about the next question then. Among the following statements, which is not true? These kind of questions are also asked in the examination about true and not true. not true regarding the building blocks of modern finance. This is again the chapter first of your module C. Planning involves both capital planning and profit planning. Decision making in the firm includes investment decisions, financing, as well as profit distribution. Or organizing and directing focus on creating financial plans and strategies. Or controlling in the modern finance involves budgeting, record keeping, as well as financial reporting. See, they are talking about the entire area in this accounting. They are also including management. So what are they talking about? Organizing and directing focus on creating financial plans. We say the plans are related by planning process na. After planning we start arranging the particular resources for it, isn't it? The resources are collected as per the C point, that is organizing and directing the focus. Done everyone? So that would be the answer. So let's move on to the next question then. These are all theoretical portion of the first chapter of the module C, everyone. So these are playing a very important role because they can come in the pure theory format. I can expect this particular chapter in the form of half and 1 marker questions. In the context of agency conflict, who are the principals, who are the agents? The concept of agency is covered in the back questions of the IIBF book as well, everyone. So according to you, what would be the answer? चलिए, principals are managers and agents are shareholders. Principals are shareholders, agents are managers. Principal are shareholders and bondholders, creditors and managers. But the agency is basically certain people are taking care of the money which belongs to the original people. Original people are owners of the organization. Shareholders are the owners. Shareholders are owners, while if I talk about agents, that would be our managers. Done? Chaliye, let's move on to a very important aspect that is called corporate social responsibility. Which of the following activities can a company undertake under corporate social responsibility as mentioned under section 135 of the Companies Act 2013, everyone? Selling products at a discounted price, conducting aggressive marketing campaigns, donating to political parties, or investing in education and healthcare initiatives. Everyone, when we talk about corporate social responsibility, how does CSR work? I think in terms of CSR, one of the best things that happens is corporate social responsibility helps us to work towards the particular goal of society welfare. That's one of the basic reasons that people go for CSR. So in this case, when we're trying to talk about CSR, corporate social responsibility, the answer would be investing in education and healthcare initiatives. This is the only area. Discount price is basically when you're trying to sell things. Aggressive market campaigns is purely something where you are talking about the work in such a way that we are looking at how do we actually make more money out of the working that we are doing right now. Isn't that is hardcore truth, everyone? When you are doing aggressive marketing or you are trying to donate to a particular these, I would say, these political parties, even you are trying to survive in the marketing, you are not doing something for the market. That's one of the realities. Okay, so if you're doing something for the market, then your scenario is different. That is one truth. So in this case, investing in education and initiatives is the answer. Okay, everyone, JIB, CIB, the entire area 2024 The financial year end is here, so the special offer is still going on. That means you will get 81% discount along with the double validity on our Mahapacks and 81% discount on all our courses, be it JIB, be it CIB, right? So if you're looking forward to, this offer is ending very soon. So if you haven't planned for purchasing our courses, then start thinking about it right away, and within a few hours decide and execute that part, because once the time has gone, then the courses would be available at their regular prices, so you will have to pay more for something which you can right now pay a little less, right? Chaliye. Then what you can do is just check out our website there. I think I showed you the website earlier as well now, so just taking you there again. Look at this. You need to go on to our website, that is www.247.com. This is where you will find our JIB and CIB. Look at the JIB May 2024. Our numerical batches starting from tomorrow. Our crash course has already started. And along with this, not only the crash courses are here, not only the numerical batches here, but the Mahapack is also available at 81% discount. Let me show you what to do. You can use the code Y. You can use the code Y 541. As soon as you will apply this code, you will get it for 5699, everyone. For 5699 you're getting for 1 year. That means 1 year you are not even paying 400, you're going to pay 400 something for this entire amount. Okay, that means you are paying 5699, and that is for 12 months, huh? So that means you are paying 474 rupees overall. This is lesser than the price of the 4 screen or the higher level of Netflix that people buy. So that means you're not even investing in for 1 month, but you are actually investing for the entire year at 5699, which includes all the batches. You don't have to pay separately. The crash course, the regular course, the classes, the revision batch that will be coming up, the numerical batch which is going on, along with this any specific area of JIB and CIB. If you take up the JIB, CIB, Mahapack, everything is included. Not even a single penny would be required for the next 1 year for your JIB, CIB investments. Be it JIB, for the people there, we have come up with the JIB Mahapack. If you want to buy JIB plus CIB, then for the next 2 years, your investment would be done at once. So think about it, get it done as early as possible, because yes, the time is ticking away, and before the opportunity is lost, go ahead and check it out. Done. Chaliye. Moving back. After this, let's go ahead with the next question. Everyone, if you find this particular class helpful for you, then please go ahead and share the session. Don't forget to like it, and the PDF would also be available to you later on. That would be included in the link given below. So I'll attach the particular PDF for this, and I'll share this in my Telegram channel as well. You can find me in terms of Telegram there. The name of my channel in terms of Telegram is that is JIB exam. It is JIIB exam 2023. I think we'll be editing it up. That is Niharika ma'am. Okay, so this is available to you. So kindly check it out on our website or in our app for further details. Okay, so go ahead everyone and enroll yourself, and also join the Telegram channel for more updates regarding the classes and all. Acha, agency problem in the financial management. Pata hai, the problem is the people who are actually putting money are the owners, and the particular people who are getting something out of it are the agency is basically handling it, and owners are actually sitting outside. So sometimes na, the people who are sitting outside, they might be feeling ki probably na we are not getting the help. Matlab, one particular person can say ki nahi, agency people are enjoying. The second point is the people who are the owners of the organization, they would be asked, sir, you are just putting money, what are you doing, right? Shareholders can be asked about the same thing, and they can also have a finger pointed towards agencies. That is, the shareholders can ask the management, you do nothing, it's all our money, it's not your money, so you don't get stressed about it. So these kind of conflicts can come up. right? So that's not a good point, but it happens. So here comes the answer. Conflict between the shareholders and the management. Practicality. Acha everyone, first chapter is officially over. Now moving on to the next chapter. Everyone, please share the session. Don't forget to like it, and also keep your calculators handy today, because we are going to do the questions with the calculator, and I'll also show how to do the calculation. Okay? I'll just write the calculation part, or otherwise if this is visible, I think it is visible, I'll show it to you here as well. After this particular area, I request you all to keep your calcs handy. Wherever there would be calculator requirement, you should get it ready. And it's not about only watching this particular video. My purpose of preparing the YouTube sessions is basically to help you learn about all these things. So if you are new to the JIB CIB area, then I think this would be really helpful for you. So please make sure you are keeping your calculator handy today, along with a pen or notebook, so that you can solve the questions when the calculation is easy. ठीक है? A student purchases a computer by obtaining a loan on simple interest. The computer costs 60,000 and interest rate is 12%. The question is itself saying SI, and we have interest rate. That means 60,000 multiplied by 12%. Okay? But what is the time period in this case? If the loan is to be paid back after 2 years, so you can just multiply it by 2 and you can get the amount. The formula for simple interest is P into R into T. The rate is basically in terms of 100. Okay. Everyone, visible clearly? The calculation of this part is very easy though. What you need to do is, this is a calculator. Now what you need to do is, you need to click on 60,000. Okay, I got a particular calculator which has these benefits. Whatever calculator you buy, it doesn't matter. The most important thing is that you use it well. Multiply it by 12 and click on percentage. This is easier. Take it, 12 divided by 100 you don't have to do. Click on percentage into 2. This is for 2 years, so this gives you the answer of 14,400. Okay, that's all you need to do. That is P into R into T. This is an easier part, that is 14,400. This particular question is from our book only. So when we talk about these kind of questions, when things are from the book only, the chances of these kind of questions in the examination definitely increases further, everyone. The reason that in the examination, the questions and numericals are now asked exclusively from the book itself. They are not referring to any other things that much. So you have an advantage that you can go through these things from your book itself. Done? Chaliye, the answer is 14,400. Next question, this is actually a case study. Then in this case, they are asking you to provide the total amount to be paid back after 2 years. 74,000, 74,400, 76,000 or 78,000. What's going to be the answer, everyone? In this case, you need to remember that your interest was 14,400, which you have already calculated. So your principal plus interest will become your amount. The amount was 60,000. That becomes total of 74,400 rupees. That's the answer. See, both the points are given here, the part 1 and the part 2, as you can see there. Visible clearly now? I think so. है ना? Clearly visible? चलिए. Moving on to the next question. Subscribe to our channel now, everyone. If you haven't done it yet, then hurry up so that every single aspect of this examination is covered here. And keep an eye on my classes as well. The playlist of the entire chapter wise area is already done, and now we are coming up with the next series has also started, in which we are covering it as the form of crash course. Okay, so everyone sorted? Next question. Mohan invested rupees 5,000 in company's fixed deposit with an interest rate of 9.8%. How much interest he would earn? FD, everyone. Now the point arises. In case of an FD, what happens? FD is basically simple interest based or compound interest based. FD is based upon compound interest. Sometimes in the question they will not provide you the details that what you need to do about it, but they will give you a particular situation which you will be able to use and understand where the problem is exactly arising. Okay? So what's gonna be the answer? Chaliye, let's look at the answer there. The answer in this area is 940, 960, 1080 or 980. Acha, today I'll be telling you about how to find the squares, cubes as well with this particular question itself. For compound interest, now we have a formula. For compound interest, the amount is equal to P into 1 plus R raised to power n. That means if it is 5,000 rupees, then we have 1 plus 9.8%, and the time is basically 2 years. So how do we calculate it? Normally, I will have to calculate 1 plus 9.8% and then we have to do the square. That is what we do. So how do we calculate it easily, everyone? Let me show you. That's my calci. I think it's absolutely clearly visible. So look at this point, everyone. I am taking 1, then plus 9.8 and percent. That gives me 1.098. This is the percentage that I'm getting right now. Everyone clear about this? Now, based upon this, how do you do the square? Normally, we'll do is multiplied by 1.098. Ma'am, this is the way we do it, hai na? So in this case, we'll get the answer. Why do we worry about it so much? No, there are other ways as well. If you get this 1.098, click on multiply only, everyone. This calci is smart enough to do anything. There is no specific model that will be able to do this, but when you are buying a calci, always check for this feature. Click on multiply and then click on equal to. This will give you the answer. That means when you are calculating the questions there, you just have to click on multiply and click on equal to. That means you don't have to write the entire thing again. Writing it here as well. This is the first calci trick that we are learning. Okay, in this particular session, calculator tricks for finding squares, cubes, etc. Whatever you go up to in the specific area. First of all, write the term. Matlab, for example, if you're trying to find 2 there, pick it up. Look at this. Okay. This is 2 multiplied by, I've just clicked on multiply, nothing else. Clicking on equal to, this is giving me 4, giving me 8. Already multiplication is constantly done. If I'm just clicking on equal to, my calculator remembers that I just have to, I am multiplying everything by 2. So the number of times I click on multiply, it will increase further. See, it goes up to these much amounts without any problem. That means when you are doing these, the rule is you write the number, click on multiply, then click on equal to. This is square. The rule is click on multiply 1 time and click on equal to 1 less than the power. If the power is square, then I'm doing -1. That is only one time I clicked on equal to. If my par would have been cube 4 times, 5 times, then I would be doing 1 less than the par. 4 minus 1, 3 minus 1. That is what I'm going to take in terms of number of times I click on equal to. So in this case, what's going to be the answer, everyone? That is 5,000, 1.098. Taking and clicking on the amount there into 5,000. That gives me the answer. The answer would be this. R. Acha. In this case, I just use that particular part, but in this case, now they also use the area of simple interest. Then I'm changing the question a bit, writing this area of. This is actually from the book itself. In case if it would be given now, there would be interest he would earn in 2 years as per SI. Okay, I've written it there so that you don't face a problem. That is as per SI. As you can see, the question, I've changed the question. So in this case, you will just have to calculate P into R into T. That can also be done, है ना? So that can also be based upon 5,000 multiplied by 5,000 multiplied by 9.8 multiplied by 2. In terms of compound interest, my answer was 6028.02, and in the area of simple interest is 5,000 into 9.8 into 2. My answer comes out to be rupees 980. So this is the amount, everyone. If I, in this question, now I'm going to make multiple questions out of it. If compound interest calculation case would have been there, what is your interest? Then your interest would have been 6028.02 minus 5,000, giving me an answer of 1028.02. In this case, my interest is this. And if they ask me about the amount in case of simple interest, because this formula is for interest calculation, this formula is for future amount calculation. There's a difference between compound interest and simple interest formula. So in this case, the amount would be what? Your principal of 5,000 plus 980 rupees further. That gives me rupees 5980. You get more money when you go for compounding. And the reason? Okay. And the reason is, what's the reason behind this, everyone? Simple reason that when we go for compounding, the benefit is there because in terms of compounding, you are getting your interest reinvested in the business. है ना? Just note it down, everyone. Am I audible? Oh, I think there was some issue with the specific mic there. I hope I'm audible right now. Just giving a quick review of whatever we have done. What is the front end interest? Front end interest is the interest in which we are talking about specifically the interest that we are getting, which is interest deducted from the principal amount. Principal amount deduction means which when we are talking about principal amount deduction, this is the area where the organization is talking about specifically the principal portion. So interest is actually deducted from the interest is removed from the principal. That is what we call front end interest. The interest is placed a little forward. That is what we can say. Then we were talking about ordinary annuity and annuity due. Annuity due was the specific area where we are talking about the money which is due in the very beginning of the year. है ना? I just, as soon as you asked me that, ma'am, your bill is due, I paid it up right away. This is a better situation because you get rewards through it. In the same way, if I deposit the money on 1st of April, I get the interest for the entire year, everyone. I enjoy that part. For the entire year, I get additional interest. If I wait for the entire year, then yeah, it would be done in the financial year itself, but it would be done on 31st of March. So, no interest there. That is ordinary annuity and annuity due, everyone. Then bullet payment or balloon repayment. Bullet payment was the payment which is done at once. Okay, so this repayment is done at just one moment. That is why it is called the payment which is entire loan amount is repaid at the end of the period. So we do not pay even a single penny during the time, we paid after the time is over. Done. Then we talk about which one of the following statements is correct about the compound of interest. Compounding of interest, you will always see that simple interest is less than that of compound interest. So this part is your C part, which is absolutely correct. B part says the compounding of interest means that interest is paid on the principal and the accumulated interest. Matlab, your interest is also compounded, or you can say interest is also reinvested. When the compounding is reduced, the total interest is more. This point says, see, if I invest the money today, after 1 year I'll get the interest and I'll reinvest for 1 year. So you will invest the money accordingly. But what if I'm putting money every 6 months, you get interest on interest. You know? So in this case, what's going to happen? We have interest on interest as well. That will be covered here in the form of all of the above. Then debt service coverage ratio is used in which of the following, everyone? Judging the margin of safety available before there is a default in repaying the loan. Judging whether the firm has borrowing disproportionate to its net worth. Judging the capacity of the firm to service the interest on debt, or all of the above. Debt service coverage ratio, I always find it's one of my views that coverage ratios, they're very judgmental ratios. They're actually asking you, do you have the ability to repay? Do you have enough in your hand that you can repay to anyone? This particular part really affects any organization, isn't it? So debt service coverage ratio is a ratio which is actually questioning you in terms of the work altogether. So what's going to be the answer? Keep on sharing the session, everyone, and don't forget to like it. Debt service coverage ratio, it talks about whether I can pay both principal as well as interest or not in the upcoming future. If I cannot pay, then I think I should not be taking the loan, to be very honest, because the point is that NPAs are not good either for the person or the bank. So it's actually based upon judging the margin of safety available before there is a default of repaying the loan. So you are actually preparing the person, sir, tell me right away, do you have enough that you can repay us? If you haven't, then there is no problem. We are not going to push you further, right? So this is the topic of ratio analysis which we have started. Chaliye, moving on to the next point. Which one of the following is true? Both EPS and PE ratio vary in the stock market price of the company's share. While calculating debt equity ratio, the fixed deposit of the shareholders are taken as a part of debt. While calculating the quick ratio, all current liabilities are not taken into account. Debtor turnover ratio is higher if the company sells more goods on credit basis than on cash basis. Which one of the following is true, everyone? The true part is, see, if I talk about the entire arena, when you're calculating debt equity, the ratio is actually taking your long term debts divided by your equity. So in this case, your FD, which is taken from the shareholders, is basically a liability that we are ultimately supposed to pay. You know? So in this case, the total answer is going to be B. Inventory ratio is relationship between cost of goods sold and cost of average inventory, cost of goods purchased and cost of average inventory, cost of goods sold and cost of average inventory, and cost of goods sold, goods purchased and cost of average inventory, or none of the above. What's going to be the answer, everyone? Inventory ratio is a relationship between. Inventory ratio is basically, it is actually called inventory turnover ratio. Inventory turnover ratio can be defined as what? Go ahead and think about. Okay, inventory turnover ratio is your cost of goods sold divided by average stock. That means your opening stock plus purchase plus direct expenses minus closing stock. Kindly note down the formula, everyone. Divided by average stock. Formula for average stock is opening stock plus closing stock divided by 2. So one part is this and one part is this. Cost of goods sold means the stock that we are selling, and average stock is the stock that we are having in the beginning or the end, and we're talking about the overall normal stock that we have possessed for every single day. Kindly note this down, everyone. Important area. In the ratio analysis, this is a very important topic. Done, everybody? Let's move on to the next question then. Chaliye then, let's move on. The answer is cost of goods sold divided by cost of average inventory. Noted down the formula, everyone. Done. चलिए, current ratio is 3:4. Current liabilities are 24,000. The amount of current assets will be 15,000, 18,000, 16 or 20. Acha, current ratio is the ratio of liquidity. This ratio is liquidity ratio. Okay, among the liquidity. The current ratio is actually CA upon CL. Okay, in this case we are given our CA upon CL is 3 upon 4. And current liabilities is something which is known to us. What we do not know is our current assets. So can we calculate it? Current assets is equal to 24,000 multiplied by 3 divided by 4. So this comes out to be 18,000. Done, everybody? Done? 18,000? Getting the answer? Let's move on to the next question. The dash may indicate that the firm is experiencing stockouts and loss of sales. Okay, both stockouts is basically the point where we are having a point where we wanted to sell, but with the goods are out of our demand. But the demand is so much that supply is not there at all. Lost sales, you came to me and said that I want this particular product, and I said, sir, I'm sorry, I cannot give you because I don't have the particular product right now. Matlab, obviously, I could have sold the good, but I cannot because I don't have the good right now with me. So that's one particular area. So in this case, what's gonna be the answer? Average payment period, inventory turnover ratio, or average collection period, or quick ratio? I think I'll go for inventory turnover ratio. Reason, this is where raw material to finished goods, how many times we are doing it. When this particular ratio is extremely high, that means you are doing it at a very fast pace. When it is very low, that means the organization is not working properly or the product requires a lot of time. So you should be producing it a lot before getting into the market so that you can cater the market well. Right? The answer is inventory turnover ratio. On the basis of the following data, the debt equity ratio of a company will be equity share capital, general reserves, preliminary expenses, and acha, just a moment, correcting it a bit. Done. On the basis of the data, you have to calculate debt equity ratio. Okay, if I look at debt upon equity, everyone, in this case my debt is total of debentures, number one, and that's it. While my equity is of 5 lakh plus 3 lakh 20,000. Okay, but preliminary expenses is a fictitious asset, so I have to remove this 20,000 out of it. The reason is under equity, the formula for equity and debt is, this is long term debt and equity is basically shareholders funds, which is your opening, uh, it is your share capital plus your share capital plus your reserves and surplus plus share capital plus reserves and surplus plus minus any fictitious assets. In this case, what's going to be the answer? This is going to be 3,20,000 divided by 8 lakh. So in this case, what's going to be the answer, everyone? 3,20,000 divided by 8 lakhs. The answer is 1:2, 0.52:1, 0.4:1, or 0.37:1. The answer is going to be 0.4:1. Which one of the following is true? Higher debt equity ratio increases the profit margin of the company. Debt equity ratio is an indicator of solvency. A higher current ratio is always an indicator of efficient management. High current ratio is very bad. If you have too much of cash around you, that means you're not maintaining your cash well. You're not actually investing this money somewhere, which is just lose. And remember, everyone, if a lot of cash is with me in a lose basis, then that means this money is not multiplying. The money which is there in my locker will never multiply. What will multiply? The money which I've invested somewhere, isn't it? Only that money can be multiplied, na? Which is invested in the market. If it is not in the market, then how will it grow? Done? So in this case, depreciation is not an expense. Should be excluding while calculating profitability ratios. We do not really say that. Depreciation is a tax deductible expense. It is allowed as a tax deductible expense. So this is also wrong. So I think I can say C and D are totally out of it. Higher debt equity ratio increases the profit margin of the organization. Higher debt equity, nahi. More debt means more interest to be paid, lesser profit. This is also wrong. So the answer is debt equity ratio is an indicator of solvency. Solvency matlab, if I ask you, will you be able to repay? And you said, yeah, the debt is enough. I have equity as well. So my organization is currently solvent. We have enough to repay our debts. Which one of the following statements is correct about fixed asset ratio? It is the ratio of fixed assets and net worth. It is a ratio of fixed assets and long-term funds. A ratio of less than 1 indicates short-term resources have diverted for creation of fixed assets, or none of the above statement is correct, everyone. What's going to be the answer? Which one of the following is correct? Fixed asset ratio is fixed assets and long-term funds. That means how much of my assets are purchased through long-term funds. Next question, everyone. This is a question of reasoning and assertion. Okay, this is basically two statements given and you have to choose which one among the following is correct. Face value of the bond represents the amount borrowed by the firm. The coupon rate of the bond is always equal to its face value. Both statements are true. 2 is correct explanation. Both are true, but second is not the explanation. First is for true, second is false, or first is false and second is true. Everyone, what's gonna be the answer? Face value of the bond represents, this is the Y team, everyone. YTM part has started. The face value of the bond represents the amount borrowed by the firm. Yes, because bonds are basically debt instrument. So that part is definitely correct. Second point is the coupon rate of the bond is always equal to face value. The coupon rate is interest rate. This is actually a situation there. If the first statement will be true, if the second is also there. Your face value will be your market value if the coupon rate is clearly stated. That is correct, everyone. The face value of the bond does represent the amount borrowed, right? And the coupon rate is not necessarily equal to the face value. So there's one problem. Correcting it up so that you don't face a problem there. The coupon rate is actually, in this case, the answer would be C. First is correct, and this part, this is not always. Acha, everyone, let me tell you one thing. If your coupon rate is say given 10%, at 10% now, your valuation is in such a way that what people wanted, that is the same thing that you're giving. Your coupon rate is equal to, this is a theorem, your coupon rate is equal to the YTM that people are expecting. In this case, your market value is equal to the face value. It changes when people start asking for a lot of things. They're expecting more, or the company wants to give more. In both the cases, the thing or the equilibrium will be hurt. So in this case, the answer would be actually C. Done. So the answer is actually C. I'll give the explanation part to you as well so that you can actually review it. Done. Chaliye. Next question. Acha, everyone, download the app if you haven't done it yet, because on our app you will get 1% extra discount. So if you are planning to purchase our courses, then hurry up, download the app right away and get 1% extra discount. Plus there's a lot of content that you will find. For example, the PDF of this class would be available in our app. So for that you will have to download the app and get it there. So please go ahead and download the app. And if you haven't subscribed to our channel, then hurry up and subscribe to the channel as well. Chaliye. Let's go ahead with the next question. Just a moment. The next question is also related to the area of statements. We have started with the area of bond right away, right? Chaliye. Let's do the question, everyone. Day count conventions are used to calculate interest payments on the bonds. Actual divided by 360 day count convention assumes that there are 365 days in a year. Both statements are true, or the statement 2 is correct explanation of bond statement 1, or the statement true, 1 is true, second is false, all this area. Everyone, what's going to be the answer in this case? Day count conventions are used to calculate interest payments. It is actually used. Or I think when we talk about the day count, I think year count per annum, we have it in a better way. So I think the first one can be false. Actual divided by 360, actual hash slash 360-degree count convention assumes that 365 days in a year. This is also true. This is also true. So in this case, one part is true and the second part is definitely, well, the first statement is actually false. In this case, I think I'll go for D. First statement is false, but the second one is true. You follow 365 days in a year, and day count conventions are used. It's not the area of interest payments. We are normally having it per annum. Okay. In this case, now when we talk about this entire area, na, this because actual 360 day count convention did assume. Acha nahi, this question has to be changed altogether because day count conventions are used. They are used, but the problem is when we talk about actual divided by 360 days, na, we are following the particular area of 360 days only. I was actually thinking to change the question, so I'll just change this question for you. Just a moment. Let me just correct it for you. This part is actually now true. Okay? This is 360, not 365. This is a problem with the question. Okay. Now let's look at the next question, everyone. Kindly note down this point, the explanation portion. This will be helpful for you. The chapter that we are currently doing is bonds. If you like this particular session, everyone, please go ahead and share it as well as download the particular PDF of it after the completion of this particular area. Okay? After this, we'll also be doing some kind of practical questions as well. So again, keep your calculator handy. Chale, let's look at the next question. Callable bond are also known as reactable bonds. Callable bonds matlab when the company can call people ki sir, can you please repay the amount. ठीक है, चलिए. Callable, basically the company is saying that we have got a lot of money, so can we actually repay you? So the company has enough money. If they took a loan for the first year, second year, third year, so there instead of going for fifth year, sixth year, they are saying after third year even we have got good money, so let's pay it back. So that is your callable bond. Then puttable bond is where investor has the right. Sir, I want my money back. Huh? But kindly give me the money. That is your investment. So that is called puttable bond. So callable and puttable are two different. So in this case, second point will be wrong. Puttable bonds are also known as callable is wrong. Callable bonds are known as retractable bonds is true. So in this case, I will go for first is true, but the second one is false. Then everyone, let's look at the next question. A bond whose par value, this is from the book itself everyone, is rupees 1000, bears a coupon rate of 12%, payable semi-annually and has a maturity period of 3 years. The required rate of return of the bond is 10%. What is the value of the bond, everyone? Go ahead and try it. A bond whose par value is 1000 rupees. Face value of the bond is given. What's going to be the answer, everyone? Acha, chaliye, let's try this question. This is a area of compounding and discounting. This is where time value of money is actually involved. In this case, what you need to do is your value is 1000. So your initial investment is of rupees 1000 everyone. Can you see the coupon rate is 12%? Your interest rate is 12% semi-annual. Oh, semi-annual matlab you're getting 60, 60, 60. For 3 years, this means this is first year, second year, and third year. This is a situation. So they are saying, acha everyone, our amount is completely given. Your interest is given. Can we calculate the PV factor of it? I think calculating the PV factor is really going to be very easy, because the PV factors are based upon, see, if I am in the present, I want to go into the future. What we do is compounding. है ना? In this case, what's going to be the answer, everyone? See, if I go into the future, it is P1 plus R raised to power N. That means this was compounding. For discounting, what will we do? We are looking at the future value is your present 1 plus R raised to power N. So, when you have your future, in the future I'll get 60, 60, 60. So, if I want to come back to the present, it's going to be divide by 1 plus R. Face value, the future value divided by 1 plus R raised to power N. In this case, whatever the value is, we are getting 60, 60, 60. And by then, we will also receive our 1000 rupees back as well. So, can I say I am getting this 60, 60 for the first year, second year, third year, and dividing it by 1 plus 10% for the first year, second year, third year. Continuously, I have to divide, because the division has to be there. Multiplication, so we learned what to do about the division, everyone. In this case, easier way is, can you see, every single figure has to be divided by 1 plus R raised to power N. Why don't I take this 60 common and take this 1 divided by 1 plus 10% from 1 to 1 plus 10% raised to power 6. Important area, everyone, please review. In this case, we are actually dividing, because earlier we learned multiplying. Now we have to divide. The problem is how to find it. 1 divided by 1.1, 1, then 1 divided by 1.1 square, then cube, then 3 times and 4 times and 5 times and 6 times. You can do this using your calculator. Let me show you how to do it. Pick up your calculator. I hope this is visible right now. 1 plus 10%. I got 1.1. I've got this value as 1.1. Now, 1 divided by 1.1. In this case, get all the years. First year, can you see you are getting 0.909? Then you are getting 0.826. 0.751. I'm just clicking on equal to, doing nothing else. But it was 1 plus 1.1%. I got 1 plus 10%. That was 1.1. 1 divided by 1.1. I have just done one thing, clicking on equal to time and again. So this is clicking on equal to only. I'm getting all the values of division. In terms of division, there is a rule. Second calci trick, everyone. Just showing you the answer here, but I'll be telling you how to calculate it. Calculator trick. In terms of division, what do we do? 1 divided by 1 plus R raised to power N, because we have to divide it. Because every single interest is going to be divided by the number of years. 1 year plus second year. Everything has to be as per present, not future. It is in the future right now. I want to come back to present. So all these things are given. Then what will we do? The best way is, you keep your interest in common. 60, 60 is coming together, and I take 1 plus R raised to power 1 to 1 plus R raised to power N. in common. I have taken that 1 divided by 1.11 plus 1 divided by 1.1 square plus 1 divided by 1.1 cube up to 6 times. How did I do it, everyone? Simple technique. 1 plus 10%. I get the answer as 1.1. Okay, I got the point. Then 1 divided by 1.1. This will give you the first year. Then second year. Then third year. It will continuously change. You just have to click on 1 divided by 1.1 and click on equal to. How many times? In this case, it is 6 times. In multiplication, 1 less than equal to. In division, same amount. So you have to click on equal to 6 times. If your calci has a GT function, then do the total of it. Otherwise, whatever the values are coming, put it in the memory. For example, first comes out to be 0.909, 0.826, 0.751, 0.683, 0.621, and the last one is 0.584, I believe. .564. You have taken all these values and then add them up. Because with 60, you have to multiply all of them. But that 1000 rupees that you are getting, because 60 rupees are getting every single year. So future value is there for every single year. You have to come back to present to find out whether it's worthy or not. But when we talk about the second part, that is your 1000 rupees, you will be getting that 1000 after 6 years. That is in the 6th year you are getting. That means take only the present value of the last year, that is 0.564. Everyone, if you are doing it for the first time, then please actually pick up your calculator and try this question. 1 divided by 1.1, click on equal to 6 times and you will reach the last point, 564. So in this case, you will be able to calculate it. Acha, this is for normal 10% wala. I had given it to you in that 10% wala form so that you can actually understand. But in this question, it is not 10 because this required rate of return is 10, but for the entire year. So in this case, the problem is, this is a complex question from the book. The problem is, if your rate of interest is 12 divided by 2, if this is 6%, then your YTM, your yield to maturity, is also 10% divided by 2, that is 5%. So whenever you are doing the question, it would be 60, 60, 60, 60, 60 and 60. 6 times you have your 60 rupees, and in the last year you also have your 1000 rupees back. So in this case, the method is 1 plus 5% raised to power 1, 1 plus 5% raised to power 2. Calculate the values up to 1 plus 5% raised to power 6. Multiply them individually and get the answers. The last year is also going to be 1 plus 5% raised to power 6. This question can also be asked in the form of a bigger case study. 2 marker questions can be added, up to 6 questions. Up to 6 marks can be there, 2, 2, 2, 3, but 3 questions can be added. Such an important area to work upon. Okay, this is part of division. We are also discussing it in our crash courses as well. So if you haven't enrolled, then kindly be there and do the calculation portion. Learn all these things in the classes. Otherwise, if you are doing it on your own, then the calculator trick that I am using here is to calculate 1 plus 1 divided by the percentages is 1 divided by 1.05. 5% added is this. I am clicking on my calculator as 1 divided by 1.05. Clicking on equal to every single time will give you 6 different points. Add them up and multiply them with 60. Whatever you get for the last year, that would be covered here. The 6th time when you are clicking on it, you will get the point of 0.746. The total of all 6 is 5.0746. The answer will come out to be 1050.48. Is this important? Indeed, it is very, very important to learn the bond value. Okay, always for practice it is always 10%. Learn from 10% and then keep on learning the other methods as well. Okay, now another question of bond. Don't be scared, this question is easier. If the bond value is rupees 1000, carrying coupon rate is 8%, is the quoted market price at 800? What is the current yield? That particular question was related to the time value of money, but this question is related to the normal division. Current yield, what are you getting from the business? Acha everyone, currently I am having the interest of 1000 multiplied by 8%. That means what is the amount of interest that I am getting? 80, है ना? I am currently getting 80 rupees. So in this case, there are two ways. The interest divided by your market price. This is interest divided by market price multiplied by 100. This is giving me 10%, or the second method can be this particular method can also be written as 1000 multiplied by 8% divided by 800. The answer would be the same, but it's just that I am writing that in detail. देखिए, whatever your face value, interest is always calculated on face value, not on market value. Your face value multiplied by rate divided by market price. Okay, writing it like this: face value multiplied by rate of interest divided by market price. Done? Okay, now I hope it is visible. Kindly note down this formula. It's an easy formula. Done everyone? The answer is this. This is also a question from the book. Very important areas. YTM ratio analysis. Do not skip the numerical part thinking about why do I do the numericals everyone? Done? Okay. Note it down. This is your interest divided by market price multiplied by 100. Everyone? These questions, especially the valuation of the bonds, they might look quite difficult, but they aren't. If you practice them well, then these questions are the most scoring ones, because I believe these kind of questions would be asked in high marker questions. But yeah, one particular point I would suggest that when you are doing these questions, please make sure that you are doing these questions in the best way possible, in a proper manner altogether. Okay? That means you are doing these questions by the end in the examination even. Which among the following statements about bond valuation are true, everyone? Bond valuation, there are multiple theorems there. So according to this, which is true? Statement 1, statement 2, 3 or 4? When the required rate of return is greater than the coupon rate, the bond value is less than its par. See everyone, if I want more, if I I expect my yield to maturity. That पता है, I want at least 12%. And currently I'm getting interest of 10%. Will I like the particular bond? I'll be like, nay, I don't want this bond. Why is it 10%? I want 12%. So that can be very disturbing for me. So what will happen is, I don't want to buy this bond. So in this case, the bond price will fall. People will be like, nay, nay, they're not meeting our demands. I'm not going to invest that much. That part is definitely there. A bond is directly related to the its yield to maturity. According to theorem 4, Vesena, actually the answer is first one only, because once we saw the theorem there, this totally satisfies the situation. So everything else, even if you read it or you don't, it's all the same. A bond price is directly related to its yield to maturity. Indirectly true, but not directly. Price of the bond, the price of other securities, they also affect it. So for example, Coke is still selling at 30. If Pepsi says I'm available at 30 at 28 rupees, so then what will happen? Even if Coke is doing nothing, Pepsi's demand is getting more, Coke's demand is getting less. This kind of situation can also affect your business, right? You don't know what external factors can affect you. So statement 2 can be wrong. Third point, according to theorem 4, the discount on the bond increases as maturity approaches when the required rate of return is less than the coupon rate. The discount of the bond increases. Acha, discount means I'm issuing it at 98, 95 rupees when it's of 100 rupees. That particular thing is more in the beginning, not at the end. Okay, so when the discount on the bond does not increase when the maturity approaches. For any change given the YTM, the percentage price of changes are smaller for bonds with lower coupon rates. This is also wrong. So I'll go for the answer as statement 1 only. I've shown you the practical part of it as well now. Chaliye then. Done with this. Let's move on to the next topic. Which one of the following statements is or are correct about zero coupon bonds? Zero coupon matlab zero interest. But if there's no interest, why would someone go for it? Simple. You are giving them discount, a heavy discount. You are giving it to them for 82 rupees and you'll be paying them 100. So technically they're still making 18 rupees per bond, debenture or per bond or whatever the securities. You conceal that point. Okay, sir, you give me 98 rupees, I will give you 100. The person will not be that much interested. Okay, gain is of hardly 2 rupees. What if I say 88 or then I come to 82, then I say, nee, sir, 80 rupees you give, I give you back 100. In this case, I can see 20 rupees gain per these particular. So that obviously would affect me to a great extent. And then I'll be like, nee, this sounds more useful to me. है ना? चलिए. Then everybody. Zero coupon bonds pay no longer regular interest. They do not pay interest at all actually. They are issued at a discount to par value and the bondholders receives the full principal amount to the redemption rate, or all the above statements are correct. The point is all the above statements are correct. First part is kind of true, that is because the second B and C are absolutely true. So we cannot go for it. Zero coupon interest do not pay any interest. So pay no regular interest. There is not even the word regular. They pay no interest. So this is true. Even it's all about the game of understanding a question. Zero coupon, no interest. They are issued at a discount. Agreed. It is issued at a big discount. The bond holder receives the full principal amount on the redemption value. The bondholder receives the full principal, matlab by the end, when we are putting it to end, we always get the par value. That is how people earn. Na? Issued at discount and redeemed at par. All of the above statements are correct. When does the exchange of currencies takes place in case of spot rate? Everyone, this is the area of Forex now. What's gonna be the answer? On the same date as the date of deal, on the next working date, after the deal of individuals, or this next part is on the second working day. Chaliye, the on the same date of the deal, everyone, or on the next working day or second working day or after the period of the spot. But the spot is basically, you asked me that, Niharika ma'am, I need this much amount of dollars immediately. I'll be like, sir, it will be delivered to you. But spot means not immediately. If it is today, it is called, it's actually the babies of spot rate. Spot in terms of today being settled, it is called DOD. Spot being settled by tomorrow, it is TOM. It is actually settled by maximum transaction day plus 2 days. Maximum 2 days are allowed, not more than that. But practically, so it is now being said, it is now being reduced to T plus 1. Your transaction day, the day on which we are making the deal, plus maximum 1 day. But in our books, it is still written as T plus 2. So I'm going as T plus 2, transaction day. This is transaction day plus 2 days. Okay? On the second working day after the date of deal. Acha, this is another important question. Forward points for the given information is spot exchange rate is 1.5. They have written the exchange rate is 1.5. Then your interest rate is 3%. The differential of interest that we have is 3%. Okay? And in this question, we are supposed to calculate the forward points 90 days. Number of days is 360. What's going to be the answer in this case? Let me tell you about the formula. You take the spot exchange rate, you multiply it by interest, you multiply it by the forward period, and you divide it by 100 because there's a rate, and you also divide it by number of days, that is 360. Now go ahead and try it, everyone, and give me the answer quickly. Everyone, this is a very simple question, pata hai, but this is very scoring as well. That is what I know. These kind of questions are really good for the examination because you get good marks, and there are many people who would think that question is very tricky. So not everyone is going to do this question. So if you are doing it, then you have an edge. Indeed, you will be having an edge over the others. Chaliye. Done. Let's solve it together, everyone. What's going to be the answer? The rate is 1.5 multiplied by 3% multiplied by the forward rate of 90 divided by 100 into 360. Okay, if you're writing 100 below, then don't write percentage here. Everyone, what's going to be the answer? My answer comes out to be 0.01125. This is a question from our book only, very, very important. All the numericals that I'm dealing with now, I'm not making the numericals from anywhere else, but I'm actually taking the points from the book itself so that you can get the exact idea of what kind of questions you can expect in your examination. Done? The answer is 0.1125. Everyone, reminder, our courses are available at the lowest prices right now. If you are planning to purchase our courses, then go ahead, use the code Y541 and get it right away, because this opportunity will be ending soon. 81% discount is a huge discount. That means you will be able to save a good amount of money right now, and double validity is also going on. That means instead of paying for 6 months, you're getting the benefits of 1 year. So please go ahead and check it out on our website or our app for further details as well. Don't forget to get the specific course right away. Okay, chaliye. Next question. Acha everyone, what do you mean by forward rates? Everyone, what do you mean by the term forward rates? एक होता है, one point is spot rate. Spot is basically the rate which is currently prevailing in the market. What if I don't want to purchase any kind of these securities right away? When I don't want to buy these securities right away, then obviously I'll go for future period, है ना? So if I'll go for future period, then what would be the value? Then the value will be definitely different. In this case, how is the value varying, everyone? That is futuristic value that I'll be considering. So which one of the following statements is correct about forward rate? In case of direct rates, if the forward rate is more than spot, the base currency is at a premium. In case direct rates, if the forward rate is less than spot, then the base currency is at a discount. The forward premium or discount expressed in basis points is called forward rates, or all of the above. Forward rate is the futuristic rate that we will have in our upcoming future. So in this case, the answer would be actually D. All of the above. Okay? Then what concept is based on the premise that the firm will earn more profit by deploying borrowing funds than the cost of funds? Degree of control, cost of debt, trading on equity, or norms prevailing in the financial system. See everyone, if I'm talking about equity now, getting equity into the business is beneficial. What's the reason? Equity is basically getting ownership. Matlab, I get the benefit of being asked, ma'am, what is your decision, whenever decision is being taken in the organization. That part is definitely there. मान लिया. But think about it. Is it really good to allow as many people as possible in the voting area? That means even if I want to have that strength in the organization, I won't be having it, because after a certain period of time, other people will, or they might have more say than me. That's gonna hurt me. That means in this case, I would want to retain my voting power. So what will I do? It's better that I go for debt. So the cost of debt is actually cheaper than cost of equity. So what we do is we do not opt for equity. This particular point is called trading on equity. Matlab, instead of equity, we are actually going for other sources, which is called trading on equity. An important point, everyone. Next point. ABC has its capital structure comprising of 50% debt and 50% equity. The cost of debt is 10%, cost of equity is 16%, and WACC is what? And again, an important question, everyone. Again, from the book only. I'm preparing all these questions from our book exclusively. So what's going to be the answer, everyone? ABC Limited has its capital structure of 50% debt and 50% equity. Hanji, everyone, WACC is a very important area. The weighted average cost of capital can be debt into cost of debt, debt percentage, which is actually called weight of debt into cost of debt, weight of equity into cost of equity. Your weight of debt is you have 50% of your debt plus 50% into 10%. Do not take the percentage in terms of the cost, just take it in terms of the weight. This will give you the correct answer. Otherwise, you will have to calculate in percentages further. I'll tell you why I said this once we're done with the question. You take your percentage of your debt, but you take the cost as it is. Then you take the weight of equity. This is your cost and multiply it with the weight. Your weight was 50%. 50% into weight is 16. So in this case, it is going to be 50 into 10%. That means 5 plus 8. This comes out to be 13%. If you write percentage here as well, then it will come out to be 0.013. Ultimately, to convert into percentage, you will have to multiply by 100. The question is asking the question in the percentage format. So it's always better when you're using WACC method, you are using this point. Highlighting it now, kindly note down this point. In this particular session, we have done a lot of questions directly from the book only, and all the different formulas are also being covered here. Be it YTM, be it compound and simple interest, all those are covered here. Done, everyone? Chaliye, let's go ahead and to the next point. At the rate of 13%. Everyone, what term is used to describe the particular level beyond the cost of capital increases and thereafter remains the same? Marginal cost of capital, breaking point, weighted average cost of capital, or risk perception? Which particular point would be it, everyone? What's going to be the answer? What term is used to describe the particular level beyond which the cost of capital increases? The point after which the cost of capital becomes in the increasing side and then becomes the stagnant position. That point is actually called the breaking point. Okay? The answer would be the breaking point. Which of the following is common misconception about cost of capital? Cost of capital has many misconceptions there. In the book only they have given a lot of points, almost 10 points are there. What's going to be the answer, everyone? Cost of debt reflects the historical cost of raising fresh debt for the project. Retained earnings do not have an associated opportunity cost. Current liabilities should be considered as a source of long-term funds. Cost of equity is calculated based on historical dividend percentages. When we talk about common misconception about cost of capital is basically that it is believed that retained earnings, your savings, do not have any associated opportunity cost. Your retained earnings, your savings has a very major cost. It is the cost of equity only. That is much that would definitely be there in the organization, right? So that's one particular thing that is going to affect our business. Done? Let's go ahead and move on to the next question. Why should the existing WACC of a firm not be taken as WACC of a new project? The new project carries its own risk perception. The historical cost of equity reflects the future return required by investors. Current liabilities represent long-term sources of finance, or retained earnings have no associated opportunity cost. When we talk about WACC, one thing is true. The new project carries its own risk and the perception. This particular thing is not considered there. In terms of existing, why should we take something which is not even there in the books? If it would have been there, then considering it makes a sense. But if it is not even there, then it should not be considered. Okay? So that particular part should definitely not be considered. Done, everyone? The new project carries its own risk perception by investors. Chale. I hope we are done with the question, everyone. Let's look at the next question. This is a question from capital budgeting area. In the cap budge, we have practical as well as theory parts. But I think the concept of bond valuation, the concept of capital, the concept of time value of money is again used a lot in capital budgeting. Okay, so make sure that you are doing these chapters almost side by side or together, or maybe you are connecting them through it, because these are very, very important. How is accounting rate of return calculated? By dividing the total profit by after tax by the total investment, subtracting the total profit after tax from the total investment, by dividing the average profit after tax by the average value of investments, or by subtracting the average profits. When we talk about average accounting rate of return is your returns that you're making. Okay, your returns divided by your average investment. Okay. Done, everyone? So in this case, the correct answer is going to be by dividing the average profit after tax by the average value of investment. Done? Acha, everyone, before I end my session, I hope you are going through our courses and our test as well. I hope you have seen the test, everyone. As you already know, our AFM mock test is already going on. That is called AFM Readiness Test, right? Just telling you where to go if you log in to our website there. Okay, once you have logged in with your ID. Once you're done with that specific area, click on the area of view all tests. You have to go on to www.adda247.com, and this is where you will find our JAIIB AFM test. Click on the area of attempt now. Go ahead. Test duration is 2 hours. It is available till 12 a.m. Actually 11:55 p.m. by 31st. That is going for 31st of March. And this is the timing that they're written. So in this case, it is still it has just ended there. So it is still going on. If I click on the area of attempt now, you can definitely go ahead and go for it. Okay. So this is where you can go ahead. This is written in a different manner. It is till 11:55 p.m. That is by 12 a.m. tonight. Before the day ends, you can go for it. So please go ahead and collect it and start it. But continuously 2 hours. You cannot leave in between and come back. You have to sit down for 2 hours straight. Acha, one more thing, everyone. If you are planning to take our courses right away now, then do not wait at all. 81% discount, lowest price. After a very long time, I've seen these things happening. So please make sure that your financial year end is going with a good investment. For that, what you need to do is go ahead, check out our JIB May 2024. Go onto the main page, all courses, JIB, CIB, click on there of JIB May 2024. See all these batches, the crash courses, numerical batches, current batches, comprehensive batches, everything, English medium, bilingual, everything is there in JIB Mahapack. So buy the Mahapack, because of Mahapack you will get everything. You don't have to think about paying time in again. So use the code Y541 and get it done, everyone. So you can get for 5699. So if you are planning to purchase our course, then do not wait at all, everyone, because time is ticking away. Okay, so I think just a moment. In this specific area, you will find it here only. So JIB, CIB, and here it is, JIB May 2024. All the courses and JIB Mahapack. Click on it. Use the code Y541. All the very best, everyone. If you haven't done the mock test yet, please go ahead and submit your mock test as early as possible. 12, you should be doing it before 9:55 because you have to submit it by 11:55. You know? So go ahead, check it out on our website, on our app for further details. And keep on learning, keep on growing, everyone. I'll be meeting you on the next weekend as well with a new marathon, new concepts, and new learning. Everyone, one more point. Practice with your calculators every now and then, because your system calculator or the calculator you would be carrying, it is very important that we get used to it before the examination. So thank you so much for being there. Bye bye and take care.